never lose it, no. But I'm broke, but now I'm living at it. They just count my zeros and some decimals.
And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico. I invested though when I let it grow.
Regiments I got a pocket for. Raise your income and your taxes low. Spend it right and then invest some more. And if you don't believe me, it's my doctor, though.
What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa, MasterCard, American Express. I bought the bank and I bought the jet.
I buy apartments, I send checks.
Hey guys, what's up? Give it a couple more minutes to let everybody else in.
When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow.
Yeah, and only then do I buy something stupid. How stupid can you go? You can go as stupid as your cash flow.
You know what heals all ills? Deals. Look who went from meals to bills. It's eat what you kill when you're in the field. In the pipeline overflowing, I don't drip or spill.
We don't seek talent.
Let me know how your day is going in the chat room.
If you really knew my dreams, it'd be more than scary. We got more to spare. Ain't no shortage, baby. Winning by the chopper and another for my lady.
Talking about the bird in the strap. Say the word and she handle that.
Fully loaded, put it at the target, and you know we letting off every man. Got my money, who got my back? You can never get it if you never ask.
Big bags, legendary swag. Only one thing better than cash.
When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow. When I walk through the door, I'm talking cash flow. And if you know like I know, you're getting cash flow.
When I walk through, no I won't do, no I won't do, no I'm talking to, not to, you know about to do, what? Walk in that door.
Well, I hope you feel better, Jason. Sorry about that, guys. Jerry, you want to go ahead and take over screen sharing and so we can start? Are you hearing me? You're muted.
Yeah, I hear you. I'm working on it.
Hey guys, what's up? Hello, happy Wednesday. So welcome to Wednesday night Multifamily Freedom Chasers Financing Zoom. My name is Shelly. I am a commercial mortgage broker and the co-founder of our brokerage company, Adventure Commercial Capital. What our company does is connect real estate investors to lenders. Investors that wants to buy multifamily, fix and flip, storage units, hotels, any business that has real estate attached to it. We can connect you to the right lender because each investor is unique and each deal is unique. So we have the skills to connect you to the right lender. So I am going to go over and have Jerry take over here. But first, let me know how your day have been going. Jason said he's had a headache, but he can't miss this call. I'm glad to have you. If you guys want to turn your video camera on so we can see you, so I don't feel like I'm talking to myself, that would be great. Jerry, go ahead.
Alrighty. Hello, everybody, and welcome to the Multifamily Freedom Chasers Wednesday night financing Zoom. I am your co-host, Jerry Miles. That was my wife, Shelly, that you was just hearing from. We are the founders of Adventure Commercial Capital. go over a little bit about what we'll have going on today. We'll go through the community ecosystem, the Multifamily Freedom Chasers community ecosystem. We'll do some introductions. We'll tell you a little bit about us, and then we'll give a few of you a chance to share who you are. We'll go through a current debt market update, and then the main topic today is alternative financing solutions for commercial real estate. And at the end, we will do a Q&A.
Also,
So,
I want you guys to use this platform for connections. Make sure you put your information in the chat so you can connect with each other. This is what we do here. We love connecting people with each other. So go ahead and put your information in the chat.
all right.
And
So,
like I said, if you can turn your screen on, go ahead.
cool. And I am not watching the chat or anyone else. So if there's questions that pop up in the chat, Shelly and JJ, if you guys could let me know, because I'm not looking at any of it. So,
Yes.
so the Multifamily Freedom Chasers community, anybody that is new to a Freedom Chasers call, let us know by putting a 1 in the chat. If this is your first Freedom Chasers call, we'd like to know who you are. Okay, so I see that there's
Damien, Michael,
comments. Okay, cool.
Dannon. I might say the name wrong. Is it Roberto? I don't know how to say the X name. I'm gonna call you X. Stephanie. Wow, I did see a lot of new names on here. That's awesome. So glad
Awesome.
to have you guys.
Well, welcome everybody.
Hey, and Rini and Marcel. I think we know them.
Yes, we know Rini.
Student.
Yeah.
Yes,
Sure.
I can call them X.
All right, great. Well, welcome everybody. The Multifamily Freedom Chasers were started and founded by the 3 gentlemen, where you see the Monday night calls listed all the way on the left side of your screen. That's Trevor, Marcel, and Victor. They started the community to help bring value, education, and connections to the multifamily space. They started the community about a 1.5 years ago now, I guess. We've been part of the community for a year and a couple months. But we do free educational Zoom calls 2 nights a week. Monday nights, we have alternating people that do calls every Monday, and then we alternate on Wednesdays. So on Mondays, we'll have an activation Zoom, which we had this past Monday, and then asset management with BB and Iffy. And then on Wednesdays, you have me and my wife doing the financing Zoom, alternating with Kevin and Ed. They're both real estate brokers and investors, and they talk about how to talk to brokers, how to network with them, how to find deals and underwrite, and all kinds of good stuff. So join as many of these as you can for the education and also for the connections. I do know people personally that are doing business together now because they met each other on our call. So I like that, and I like being able to connect people and seeing people progress and do things. So it's a privilege to be able to do these calls and to make a place for people to connect. So
Here's what you can do. You can either put your buy box or your markets in the chat and your phone number if anybody's in your area or have the same markets that they're looking in, that you guys can connect with each other. That's an easy way to do it as well.
Yep. And tell people, if you have a business that, supports the real estate investing community, whether, let's say even if you're a lender, we're lenders, but we're not scared of competition. If you're a lender, tell people in the chat. If you, if you're a builder and, or a contractor, roofer, whatever it is that you do, let people know. And you never know. You might get business on this call tonight. So, but
And
go ahead.
congratulations to those of you who have bought into the Fast Pass. We had our first week last week. It went well, and we have our second week this week, tomorrow actually. We won't be on there tomorrow, but it's going to be a good one too. So
Yeah, awesome. So who are the Miles? That's me and my wife, Shelly, and our two boys. Jordan is an 8th grader. JJ is a senior this year. And all we do right now is go to basketball games, I feel like, when we're not working. So basketball season's almost over though. So but we are commercial mortgage brokers and co-founders of Adventure Commercial Capital. We lend on commercial real estate nationwide. We got into this business. We were real estate investors ourselves, and we started this business so we could be a service to real estate investors. We had dealt with lenders that weren't real honest, and we didn't like the way we were treated. So we decided to become a lender, and that was 4 years ago, and business is going well. So, it's like the saying by Zig Ziglar a long time ago. He made the statement that you'll get what you want in life if you help enough other people get what they want. And so that's what we're trying to do. We're trying to help real estate investors grow their portfolios. So, and if you hear background noise, we have a house full downstairs of our house right now. I hear them running around and all kinds of things. So we always have a house full. So excuse us if you hear the background noise. So, but I want to open it up. Anybody that wants to unmute themselves and tell us a little bit about you. We probably got time for 3 people. And I'm not able to see anybody raising their hand. If you raise your digital hand, Shelly will call on you. Don't
now
be
is your time. Now is your time to get known and let people
JJ,
you.
unmute and tell us what you got going
Howdy.
on.
Yep. Oh yeah, I was about to raise my hand. All right, so my name is JJ Miles. I am 17 years old, about to be 18 years old, and I am a YouTuber. I make YouTube videos. My YouTube channel name is Tree LOL if you want to check me out. I make 1 video a month, and I'm getting paid now, so this is most likely going to be my full-time job going forward. And yeah, that's pretty much what I do. I just love business and love making videos, and want to get loaded one day. So yeah.
Well, thanks.
And
Thanks
for
for
those of you,
the
and for those of you who knows the story about when was it back in January, JJ was selected to be on the homecoming court and he didn't want to go. He actually went. It was his decision and it turned out great.
and he was recently we got word recently he's getting ready to graduate, and we got word that he is going to be the valedictorian of his class this year as well. So
Yeah.
we'll take time out to brag. We're proud of him. So.
You guys can congratulate him too if you want.
All right. Well, nobody wants to share. I will go on to the current debt market update. So everybody wants to know, everybody asks all the time, where are the current rates? What are you lending at right now? And that's really a loaded question because, it depends a lot on the deal that we are, looking at. Every deal is different. Every lender's different. If we're looking at multifamily, our first thing we go to is, agency debt. And we'll kind of talk about some of that since this is a multifamily Zoom call. So we'll talk about that some. But the federal funds rate right now is 5.25 to 5.5, the highest federal funds rate in 22 years. Everybody knows the story on that and what's going on with the inflation. And a lot of people are hoping that's going to come down here in March. I don't see them doing a rate decrease in March because the jobs report and things came out the other day, and it came out pretty strong. So they're not much of a chance that we're going to have a decrease anytime soon. They want to see the economy in some pain before they start bringing those down. The last thing they want is to start decreasing the rates, and then we go into hyperinflation. So that's the fear that they have with starting to bring them down right away. So could cause a buying frenzy of houses and everything else is kind of the fear there. Now the 10-year treasury and the 5-year treasury, if you're looking at getting 10-year debt, when I say 10-year debt, a term of 10 years, usually amortized 25 or 30 years. Your rates generally are going to be based on the treasury when we're looking at multifamily, because we're looking at Freddie and Fannie debt. 5-year treasury for a 5-year term. When you look at your home mortgages, you can look at the 30-year, and then you can add 1 to 2 points to that, and you'll get kind of what your mortgage rates for a new home would be. So the treasury rates determine the rates we pay. The treasury rate plus 1.5 to 3 equals the rate, your end rate, when we're looking at Freddie and Fannie debt. So when we're looking at small balance, anywhere from 2 million to 7 million is what we consider small balance. We can go down to 1 on certain occasions, not always. So add two to 3 points to your treasuries on the small balance side. Anything over 7 million, add 1.5 to 2.5 on the conventional side. So if you're looking at a 5-year term, you could be as low as 5.5 on a larger balance or a conventional loan through Freddie or Fannie. So here is a rate sheet. I did not update this today because it's the same as it was. It hasn't changed much. It went down a little bit towards the end of January. We had the jobs report came out, and it bumped right back up to this. So this is where we are at currently. And if you look at the screen here where it says Freddie Mac small balance program, 2 million to 7.5 million, and then Fannie Mae small loan program, 2 million to 6 million. If you come with a deal where your loan amount's going to be, somewhere between 1 and 2 million, we like to try to do those. That doesn't always work out. If there's other hair on the deal, we would say, it's not going to work if it's, the market's not as ideal or something like that. They're not going to really be too excited to lend on it. So, but you see 80% loan to value, 1.25 DSCR. That's your rates coming through there, and you see the 10-year, 7-year, 5-year, 30-year. So that's the rate sheet. I'll keep it up there for a second so everybody can take a picture or whatever if you'd want to. So continuing with the current debt market update, the market has been stagnant, pretty stagnant over the past year and a half, since they've started bumping the rates up. The Fed decided, Jerome Powell, whoever it is that pulls the strings there, decided that they need to start raising rates because, inflation was getting out of hand, all kinds of things happening. And so because of that, it's caused kind of a stagnant market, when it comes to real estate, commercial real estate, especially, even your home, residential real estate as well. But I will say in the commercial market, not so much in the residential market. Residentially, people really aren't hurting as far as being into, getting themselves into the adjustable rate mortgages and things. but commercially, it was real common to get a loan at, a 3-year, a 2-year term or a 5-year term. And a lot of these loans now, when these terms come up, the rates go adjustable. And so if they were in a 5-year term loan or a 2-year term loan or whatever, they might have been paying, 3, 4%, 4.5%. And now when the rates adjust, they're going to be, bumped up to, in some cases, 6, 7. If it's a hotel or something like that, they're going to be figured a little differently, and they might be 8 or 9%. And an office might be 8 or 9%. So there is a lot of opportunity coming to the market as these rates adjust and these terms run out on these loans. The cash flow of these properties are really hit. A lot of the properties, when this happens, are going to be in what you call a technical default. You're required by most banks and lending institutions to keep a certain debt service. And if you drop below that debt service, the bank can take the property back. So there's a lot of that kind of stuff hitting the market right now. And there's a major correction underway. $2.7 trillion of debt maturing by 2027. Over 500 billion in 2024 and 2025. And there's lenders that are starting to take properties back and starting to look for sellers. I'm in Grant Cardone's real estate club, and they were talking today, and there was quite a bit of talk today of people on deals that they're looking at, and the current owners are in real trouble. The current owners are in technical default in a lot of cases, and it's just a matter of time before the bank takes it back or forces a sale. So there's going to be deals coming to the market. Continue looking. Don't pay what the sellers are wanting unless it makes sense for you. If it doesn't make sense, wait on it to make sense. Because if it doesn't make sense, your numbers don't make sense, it's not going to make sense to somebody else. And this isn't the market that you need to worry about losing a property. So, all right. And so our main topic for tonight, alternative financing solutions for commercial real estate.
Hey, before you move on, there's a question in the chat.
Okay.
Jason said, is there any way to find out some of this information regarding the defaults?
Yeah, I mean, you can, you could start calling local banks. Start calling local banks in your area or other areas you want to buy. And, areas that you're looking in or shopping in, you could start calling some of the banks, asking for the commercial mortgage people, but, anybody that, has the, paid subscriptions to some of these, CoStar and Crexi and different things, sometimes you can see the ones that are starting the foreclosure process. Excuse me. They have different things on their sites, but networking with some of the local banks might be a good way. A lot of the banks, as they get properties that are like that, I mean, some of them already have people that they deal with, that they're, that they know are buyers that can operate and do things, and they're going to be calling those same people that they know that have other loans that are in good shape with them, and they're gonna try to work something out with some of them people probably. But networking with bankers and things is a good way to do it. Hope that helps, Jason. You're muted.
I said yes, that should answer Al's question as well.
Cool. So conventional ways that people finance commercial real estate. Just going to your local bank or credit union, Freddie and Fannie, life insurance companies finance a lot of commercial real estate. You can get a CMBS loan through a local bank or through us. HUD loans and bridge loans. Those are all pretty common conventional ways that people finance commercial real estate. Trying to think how many I got here. 1, 2, 3. We have 5, kind of different ways that we'll talk about today. And then we'll get to the question and answer. So number one is private money or hard money. A lot of times, it's private money and hard money, that are doing the bridge loans. But different private money, there's a lot of different names for it. Most of your fix and flip lenders, those are private lenders or hard money lenders. Most of the people that are lending on, real estate when there's construction involved, those are private money lenders generally. These guys, there's some of them that are raising money themselves. When you're talking to private lenders, we have a whole bunch of private lenders that we broker deals through, and bridge lenders and hard money lenders. And I will tell you, out of the 20 something that we do business with, I would say half of them right now are really not taking on any more business. A lot of these guys have money out right now on the street. They've lent it out, and they're waiting on the money to recycle. I said before that it's a stagnant market. When these guys lend money out, if it's their own money or they have investors that have invested into their fund and they're lending that money out, this money goes into a deal and they collect interest, they collect their fees, in hopes usually a year to 2 years, that person is either selling the property and they're getting paid off, or that person's refinancing the property and they're getting paid off. In the current market, there's not been a whole lot of sales going on. And there's also not been a lot of refis been able to happen. So if you would have borrowed hard money with the plan to refinance at 3.5% 2 years ago or 2.5 years ago, and during your project, the rates jump up to 6.5%, it's not going to be feasible to be able to refi that property and pay the hard money off, because now that private money lender probably owes or probably is into that deal more than what the property can be refied for. Sometimes even more than the property's worth. So a lot of these guys are hurting. They don't get paid, their fees a lot of times until the deals are sold off. They're paying a lot of their investors back as they collect interest payments. But there's still some of them out there, and we know who's lending, we know who's not lending. I try to talk to them regularly, so I know kind of where they're at. Some of them, some private lenders actually, they'll raise a couple $1 million and then they can go and get 10x what they've raised from Wall Street, or a warehouse line of credit, or something along those lines that they then lend out. Those guys are really tied down because they then have to answer to the criteria that fund that they're borrowing from is telling them what they can do and what they can't do. So their hands are being tied in a lot of ways too. So but private money can take on riskier deals. Usually they're higher rates. I've seen them as low as 9 recently, and I've seen them as high as 18 and 19% recently. So they're kind of all over, and really deal dependent and borrower dependent. So if you've got somebody offering you a 16 to 18, 19% loan, you need to look at that deal again and say, what are they seeing that I'm not seeing? So, but usually higher rates, and some of them, like I said, the ones that are tied into Wall Street and things, they've got a lot of hoops to jump through to close deals. The guys that are really private and hard money, it's all their money, they control the money. those guys can close deals really quickly. I've seen some of them that can close deals in 5 or 10 days. But it's very important when you're looking at private money lenders to know who you're working with. Um, I've heard of certain ones that, collect due diligence fees. It's common in commercial real estate to collect a 1% due diligence fee at the beginning of the deal. And I've heard of them collecting due diligence fees and then turning the deal down and keeping the fees. So I've heard of that from several people on different occasions about different lenders. So it's important to know who you're working with. I'll leave that there. So another alternative financing solution that you can consider, and that is seller financing. Seller financing, you don't have a bank or a lender to qualify with. It's all relationship based with the seller. There's a lot of these deals that can be done right now. As you look at the population, I mean, the baby boomer generation, there's a lot of people that are aging and they're getting, where they're not able to do the things they used to. That maybe the guy's managed this apartment for a long time, and now he's in his mid to late 60s, and he can't crawl around on the floor and fix a toilet anymore, and he wants to sell. Well, this guy, if he sells his property and he, maybe he sells it for 10 million bucks, he's going to have to pay capital gains tax on $10 million. If you go to him with a seller financing option, hey, I'll give you $1 million, and if you finance 9 million, and then the guy's paying a smaller tax on the money that you're paying him, yearly for financing a deal for you instead of that big chunk. It sometimes is a good option for some of these people, and you just gotta when you're talking to buyers, or when you're talking to sellers, you're the buyer. It is really important to find out their why. Why is it they're selling? Dig in, dig in, dig in, dig in on why are they selling? Why are they selling? Why are they selling? Some people, I mean, they're just not able to take care of it anymore. They don't trust management companies, all kinds of reasons. In this market, there's a lot of people selling because their debt's due, and the property's not cash flowing anymore. Their insurance and taxes have gone through the roof. Who knows what it is? Maybe they had a partner and the partner and them are fighting, or whatever. But with seller financing, you're not going to need to qualify through a bank and through all their stringent terms. Sometimes it's the only option. There's occasions, especially in today's market, that seller financing is the only way these people are going to sell or be able to sell. I was in contact with someone this past week that has a property they want to sell. The property is totally unfinanceable. There is not a bank that will finance it, but the property cash flows. And this guy is willing to sell on it. He's willing to do seller financing, and I can connect somebody with him if, his thing is it needs to be somebody that's managed before, so if you've bought and managed multifamily before, he's willing to talk to you. So you can reach out to me tomorrow or something on that. But the property is good property. It's nice. It's just not in a location that is ideal. It's in a college town, small college, and the college does a master lease on the property. So it's almost like a triple net lease on the property. But it's not financeable through a bank because of the size of the college, because of the area, and all these things. So seller financing, you can negotiate your own terms. I'm sharing my screen right here, and I've been listening to a book called $100 Million Offers, How to Make Offers by Alex Hormozy. And that's what he talks about, is negotiating terms on deals. Negotiate terms on a deal that are so good that the people can't turn it down, is the idea behind the book. But good book, and I recommend it. So But yeah, last thing on this page, find out why the seller is selling. This could be their best option, and it could be a good option for you. I mean, if you're buying on, owner financing or seller financing, generally seller financing, they're not looking at your credit. If you have credit issues, they're not looking at your net worth generally because, the bank's going to look at your net worth. They're going to look at your balance sheet to make sure that you're qualified. Seller financing, you might not have that issue. So could be a real good option. Next, you can raise capital to buy a whole deal. And when you capital raise to do a whole deal, you're in control. The bank's not in control. You're raising capital from people. You got to look when you raise capital from people or you raise money from people, you got to look and understand you're at this point, you are a servant to that person. And when I say servant, I don't mean it in a bad way. We're all servants to somebody, right? But you have to take care of those people's interests, but you're in control of the deal. When you raise the capital, you can make all cash offers and you can also close quickly. We've bought houses with cash before, and when you buy a house with cash, you can close right now. I mean, it's just a matter of signing the papers and writing a check. So when you raise capital to buy deals and you have cash to show, hey, I'm buying this property for 10 million, I've raised 12. I guarantee you that that broker will take you serious. So when you can show that bank account. So another alternative financing solution is a lease option. And this really isn't a financing solution, but it's a way of getting control of a property. You can do a lease option with a seller, a lease option or a master lease. I was in Grant's real estate club. We go to a Bring Your Deal workshop twice a year. And one of the Bring Your Deal workshops, Grant was on this master lease idea, probably half a day, talking to every deal that come up. He would say, hey, have you thought about doing a master lease? And his was, well, these people are in and hurting on this deal, find out what the situation is. Offer them 500,000 or $1 million. Find out what's going on with them, offer them some cash and take the property over, take control, with an agreement that you're going to get out of that, you're going to get them off of the papers in a certain amount of time or whatever it is, 5, 10, 15 years, whatever it is. But you make an agreement with them to take control of the property. It's not the same as doing a owner finance. It's, hey, you're still the owner. It's almost like a triple net lease that you're doing. I will pay you this much every month, and then you're going to collect the difference. And you're going to take control of the property. And sometimes if they're wanting more money than what the property's worth, you can do a master lease. And in certain cases you could put minimal amounts down and they're hurting so bad, they just want somebody to take it over, So just things to think about, keep you thinking, and creativity, on all fronts is important in this kind of a market. So, and you can push for a long-term solution down the road. It allows time. So I see Jason has his hand raised. Go ahead, Jason.
Yeah, hey, it's been a while. Good to see your
How's it going,
face,
man?
Jerry. Man, it's been quiet with debt the way it's been, so that's why you haven't heard from me. But I have actually two deals. You probably maybe saw me in chat. But one specifically, the location is great. It's on Crexy, and it's been on for way too long. And I got under the hood as to why they're selling, what is the problem, and what's the solution. Well, the problem is you're not going to get debt. It's poorly managed, low occupancy, but everything about it is great. I said, look, that's not my problem, right? That's your problem.
Yeah.
But the only way this is going to happen is if we do something like this. And I think as we, as you know, those that are trying to get into the market, understand how that master lease options it is going to be the only way that some of these groups are going to be able to exit, and still retain primary position, right? So unless you're coming in with equity down of 20-30%, and they sell or finance, they're still, yeah, it's there, but you're risking a lot of dollars with other people's money when the master lease is basically the same thing. And so when I approached this, I said, look, this is how it will happen. Give me within 24 months, I will master lease, I collect everything, and I can get a $3.25 million 16 unit deal for 300,000.
Yeah.
So and I've already ran it to where we're going to execute this over just in 2 years, get it up to about 5 million. So at the refi, it's enough money to pay them off, and now I own it with no equity out except that initial drop in. So I think there's so much there to learn in this market as we have more and more people come into needing to exit.
Yeah. Yep, for sure. There's going to be a lot of deals coming to the market that, as people are, realize managing property is not an easy business. Being an asset manager on these deals is not easy. You looked, everybody that was doing it, for the last 5 or 6 years, looked like smart people. They looked good because every deal was growing in equity every year. The values were going up like crazy, and everybody was killing it. Now that the market is getting tougher, you're not gaining equity. It's going to be hard work for people that are getting into deals, or people that have deals now, to really push rents. As I don't think the job market's going to stay as high as it is. I think it's going to start getting hit a little bit. So these deals are just going to continue flooding to the market, and as more of them come due, as far as their terms are coming up, it's just going to create more and more opportunities, and more things that are there that we can capitalize on. So thanks for sharing, Jason.
Yeah, thanks for sharing, Jason. I'm seeing the chat going. I love seeing everybody connect. Jerry, can you go ahead and explain what a master lease is?
Yeah, I mean, it's kind of like, it's just you're leasing the whole property. You're pretty much,
So
I'm
kind
going to take
of
this.
like a Kroger building.
Yeah, like a triple net lease almost. Yeah. Yeah, almost like a triple net lease. Like, I'm going to do this, I'm going to take everything over. You're not going to have to worry about nothing. That's kind of what it is. So, and through that master lease, you're usually going to have an option to purchase at some point, to get out of that master lease, and it's going to become yours. So, and sometimes the owner might stipulate that that's going to have to be in 3 years, or it might have to be in 5 years, or whatever it is. So, but my advice is make that term that you have before you have to get out of it as long as possible. Um, I'll go to something here in a minute. I'll do this last slide, and before we go to Q&A, I'm gonna well, I won't even do that. No. Grant was showing his the treasuries, how they're going up like this, over the last year. And he's saying these treasuries are not coming down. They'll come down a little bit, and then they're shooting right back up a little higher, and coming down, coming back up a little higher. And interest rates are not going to drop the way people are saying they're going to drop. and everybody's sitting around hoping and holding on all this hope, trying to, you know, I think in a lot of ways it's false hope. If there's any hope in it, it's that it's an election year and politicians do anything that they can do to get elected. And, they could pull some strings. The party in control now could pull some strings and get the rates lowered here before the election to make it look better on them. And, there's a good chance that could happen. But I don't really foresee it being too much. When everybody got excited about, oh, the Fed's going to lower rates, they're lowering rates this year. They've raised rates so fast, a year and a half ago, three quarters at a time. And now they're talking about lowering it a quarter point and then another quarter point and maybe a third quarter point for the year. So they're looking at through the year lowering it a quarter point, three quarters of a point when they'd raised it three quarters of a point like 3 or 4 months in a row. And that's just not going to do much to relieve the stress on the market. So, other alternative financing solutions, these are two I threw in here at the end that a lot of people don't think about or consider a lot when they're looking at commercial real estate. But that is SBA and USDA. And USDA is for properties out in the country a little bit, secondary markets, things like that. So these both need businesses attached to them to for the funding. So you cannot buy multifamily with these two options, but you can buy RV parks. You can buy senior living facilities. You can buy storage. You can buy restaurants that have real estate attached to them. You could, a lot of things that have real estate attached to them as businesses, you can use these to buy. And you can get a lot higher loan to values. USDA up to 80%. SBA, there's certain occasions where you can get SBA and you can pay for the whole thing without, the SBA will fund 100% if you got rehab money and things involved. It's not always the case. Generally, you'll need at least 10% down, but SBA and USDA both fund hotels as well. So if you have a hotel you're buying with SBA, it's a little tougher with hotels right now, but USDA is still funding more hotels than the SBA. But if you have a hotel that needs some rehab and things, when the market was a little stronger, you could buy a hotel, get rehab money, and sometimes even what do they call it? Walking around money for the owner as well. You could get a couple $100,000, to put in your bank account, to start business with. So these are really good solutions if you find real estate that has a business. And the biggest benefit is higher loan to values. So that is all for the main topic, and we'll go ahead and open it up for question and answer. We'll do question and answer for about 5 minutes, and then we'll finish up the slides, and we'll call it a night. Is there any questions in the chat?
There is lots of questions in the chat, and the word is working capital.
What now?
You said walking around money. You meant
Yeah, working capital. Sorry.
There is some in the chats. Gosh, there's a lot of talking in the chat, which I love. So if I missed your question, go ahead and raise your hand and try to get your question answered. There's Joel. Joel, you can go ahead and unmute and ask
Go
your
ahead, Joel.
Hey Jerry, how are you?
Good. How are you?
Hello, all the Miles.
Yeah.
JJ, congratulations on your schooling, buddy, getting in with your parents on this financial journey early like that is it's crazy. It's just awesome.
Yeah, thanks.
My question is on the last part, you said the SBA, USDA. USDA is more for out in farms and things like that,
Yeah.
but the SBA will do lending on mobile home parks and RV with high
Well,
LTV.
yeah, RV parks, not so much mobile home. Like,
Okay.
yeah, RV parks with short term, not no, there's some RV parks that will have a lot of long-term tenants, more like a mobile home park.
Uh-huh.
The RV park, where you actually have the business of the vacation destination, that's what they're looking for to lend on. So,
When you say high LTV, are you saying plus like higher than 80?
yeah, in some cases. That's not always the case. 80 is a pretty good average.
Mm-hmm.
Um, but they can go to 90. If you have a rehab and things, you can get it all funded sometimes. So
That's great. That's good to know. Thank you.
you'll need to qualify. USDA and SBA are going to be really stringent on qualifying the borrower. With a lot of commercial loans, you'll need to show a net worth equal to or greater than a loan amount. That's not the case with SBA. You can buy $1 million property if you can show a net worth of 100 to 200,000. If you have the cash, if you have the cash, as reserves, and you have cash to put down, and you have some experience in that business. So
Mm-hmm.
if you're wanting to buy a hotel and you've never managed a hotel or never been in the industry at all, it's going to be tough to convince the SBA to do the deal with you. Um, you know, Something a little easier to borrow on would probably be a storage facility or something like that if you've had rental property in the past, because it's not as management intensive as a hotel would be, or a restaurant would be. So
That's awesome. Yeah, I love that. I love that. I didn't know that they would do that.
yeah, and they're going to look a lot at your personal, where a lot of commercial real estate goes, based on the deal. They're going to look at a lot of your personal, financials, making sure that your credit's good and your work history, those types of things are going to look at. So,
Fantastic. Yeah, I like it for RV.
yeah, yeah, the RV parks, it's a good business, and those guys have been killing it the last few years since COVID. We bought a camper right at the beginning of COVID, and when we first bought our camper, we were paying $20 to $40 a night for campsites. And this past summer, we found some campsites that were charging over $200 a night to park your camper there. So,
Yeah,
and some of them have been really doing well. So,
yeah. I'm loving that space right now.
yeah,
Thanks, Jerry.
yeah, no problem. Thanks for being here. All right. So if any other questions come up, just feel free to raise your hand. I will go ahead and move on to through the slides, and I'll get to you as you come up. Um, if you have property that you're looking at, need a quote, these are the things that we will need. This is just general. If you're coming with something a little odd or, that's not multifamily or not just your normal, run of the mill property. But this here, T12s, rent rolls, and OM, if you have it, is very helpful. Not because we believe all of their stuff they write on it, but because it will have address and things like that. I get a lot of people that send me T12s and rent rolls, and it doesn't have an address or anything on the property, and the OM has those things. So um, it's very helpful. So I see Shelly has a raised hand.
Yeah, I'm seeing a couple of questions coming across here.
Okay.
Said, Damien said, what would be the success rate of doing a deal with 100K cash, a credit score of 699 with primary home and foreclosure?
In foreclosure, I mean, it depends on what kind of deal we're looking at.
Mm-hmm.
Um, if you're trying to do a fix and flip, I can probably find a private money lender that'll do it for you. If we're looking at SBA, there's probably no way. And generally, most of the lenders are going to be no way. But I do have some that would probably look at like a fix and flip or something. But you're going to have to explain the primary, you're gonna have to explain that away. And have a good explanation. That would be a big thing. So, like I said, these private lenders, if they're controlling their own money, if they like the deal, I mean, I talked to a guy here locally. He's an older guy in his 70s, and he's bought properties his whole life and got a big stockpile of cash, and he lends money out. And he lends it out at 6 months at a time for fix and flips, 100%. He lends out 100%, no money down, and he said his only criteria for the loan is that he needs to look at the property and decide if I want to own this property, I'll lend on the property. And but he charges 12% every 6 months. So if you go over 7 months, you're owing 24% on the year instead of 12%. And he makes good money at it, but he can close deals right away. He can do all these things, and somebody comes to him in a situation like this, he'll lend on it. He'll do that. He'll do that for you. But if it's a property that he wouldn't mind owning, is his words. So, everything's for sale. Money's for sale if you're willing to pay for it. So, if your situation's a little hairy, then you're going to have to pay for the money. So,
Yeah,
hope that answers the question.
I got a couple more questions
Yeah.
here. How do you look at getting a business loan for the down payment on MFP?
Oh, like a loan to put down payments on multifamilies? Um,
From Olga.
yeah, I don't have any options for business loans like that. The only thing that I could think of is, I mean, you could, if you have an LLC, they have things where if you have a good credit score, they'll lend, 20, 50, 100,000, depending on your personal situation, and they'll lend it to your LLC, like through the form of credit cards. But usually your returns on multifamily are going to be less than your interest that you're paying on that loan. Because those, I mean, if anytime you're doing a business loan, it's going to be a little higher interest generally. So, you know, I I don't know that I don't see that as being, unless you find a really good option is on borrowing some money. Um, but I would make sure it's a really good deal that you want to be in. So that you believe it's going to make more than what you're paying. And it better be a sure thing, because you don't want to be stuck with a bad operator that you lose your money and then you owe the payment now too. So it's bad enough if you lose your savings, but now you got to pay it back, out of your W-2 or whatever it is that you eat with. So
And Michael said he's looking for a private lender for fix and flip.
yeah, I can help with that. We
And
do a
then,
lot of fix and flip loans. So
and our information will be up in a minute here, guys.
yeah.
And then Danon said, "Hi Jerry, if you found a property for sale that last traded in 2021, it's a multifamily property, would you expect the price to be around the same or lower than it was last traded for?"
Oh, it would have to be lower now. It would have to be lower, because, and I mean, unless they bought a property that was, let's say the property was vacant and they needed a lot of rehab, they put a few $1 million in rehab in it, now it's fully leased, and, that would be the only occasion where I would say that, you know, they're going to make some money on it. Otherwise, if they just bought it to turn their operations around, things like that, I mean, I mean, they better have doubled their NOI and things to be able to get the same money out of it. The cost of the property to buy a property now, because of financing, because of insurance, because of taxes, is so much higher than what it was in 2021, that there's no way, if it was a fully operational property in 21 and they bought it fully operational, yeah, there's no way it should be the same price. So, now there's probably certain occasions, like I said, where they did a lot of rehab and things, but generally they're gonna lose money on it. And what I've been seeing, lenders were lending 65, 70% of the property. The rest was equity. What I've been seeing lately is all the equity's gone. And so when these people are getting rid of these properties and selling them, they're investors that put 100,000 a piece or 1 million a piece or whatever it is they put in. That money's never going to be seen again. So I mean, it's a bad situation for a lot of people. And if you're trying to syndicate deals, it's going to get tougher and tougher to raise money as these stories of aunts and uncles and grandmas and grandpas putting money into their grandkids' deals or nieces and nephews' deals or kids' deals, and it was their 401k that they put in there, and that money's gone now. When those stories start hitting mainstream, and you have CNN and Fox News and all these doing hit pieces on it, if you think it's hard to capital raise now, it's going to be really hard when that happens. So get good at it and be good and honest at what you do. So
I got a question from Kevin. What is your opinion of the best source of finding out when a property has a note maturing soon?
all these sites like CoStar and Crexy and all them, you have to do their paid subscription, on their site to be able to unlock this information, and that's the best way to get it. It's expensive to get that info, but that's the best way I know to get it. So
Do you truly feel that CoStar would be one of your preferred sources?
I've not used them, but I know that's what they advertise, that's what you can do on their sites.
Yeah, I have it. I'm trying to think of other good sources, so that's why I
Yeah,
asked the
I
question.
know.
So
Grant's group is testing a software right now. Grant Cardone's group he's testing a software right now where they're trying to put all this information out, and they're supposedly going to do it at a fraction of the cost of all these other guys. As I hear more about that, I'll let everybody know. But as of right now, that's the best ways I know to do it. If you have some relationships with like some local banks that have a lot of commercial real estate debt out, you could start calling some of them and asking them about it, because they would know, on their book what they have on their books. So that might be another way to do it, is just if you have somebody can do some calling around, or if you have time to. I know it's hard to find time to just sit and make these kind of calls, but if you have somebody that you can put to work making calls, just asking for these things, that might be a good way to do it as well. So but hope that helps. I mean, that's the best ways I know. So
Yeah. Hi, Kevin. I didn't realize that was you. Kevin's one of our MFC leaders.
yeah.
no problem. I'm just here listening.
Yeah, thanks for being here, man.
Rini said, Jerry, what do you recommend to do if I have a deal recently with a 9% rate and I'm waiting to, she said, be down the rate. I'm guessing buy down the rate.
Yeah. Ask that again.
What do you recommend to do if I have a deal recently with a 9% rate and I'm waiting to buy down the rate? I think I'm understanding you correctly, Rini.
To be able to refi or waiting to refi.
Yeah, I'm not sure.
Oh.
If you're still here and you want to jump on and ask the question.
Yeah.
you're welcome to. Yes. She said yes.
Oh, okay. So you're waiting to refi. I mean, depending on the deal, I mean, you might not be able to get a better rate than 9 at this point on that type of deal, whatever the deal is. Depending on the deal. There's just some deals where 9% is a good rate on it, and I don't really foresee that changing a whole lot. I mean, I've seen some of our, like our, smaller lenders have come down a little bit on rates. They keep advertising and sending me emails. Hey, we're dropping this, we're dropping that, but it's 15 or 20 basis points on so that would drop you to 8.8, or 8.85 instead of a 9. That's really not going to change much. Yeah, I mean, just work on seeing if there's ways that you can increase the income of the property maybe to help with the payments. Um, that's kind of it gets tough. I mean, there's a lot of people that own right now that they're in that situation. So right now it's just a waiting game. If you're in that situation of, hey, do I have the ability to keep holding on until rates come down? And hopefully they do at some point. But I mean, throughout history, we're kind of in the middle really of where rates, have been. So in, the last couple decades anyway. So um so I hope that answers the question. Wasn't really a good answer to it, but what can you do today if you're looking to buy real estate, you're wanting to get into deals? Go ahead, Jason.
Yeah, I meant to ask this earlier.
Yeah.
When you're talking about rates and the treasuries, where do you really feel that will be towards the end of the year, giving the next 9 to 12 months? I mean, there's estimates that, we're in the high sixes, we might, hit sub fives, mid fours. What are your thoughts on that?
Um, yeah, being an election year, I would like to think that we would have some some rate decreases just, because of that. It's kind of my hope that that'll happen a little bit because really the only good reason it would happen is because it's an election year. Um, you know, I don't, I don't see it moving a whole lot, as far as the downward direction. But I mean, and I don't really know that I have it's going to be interesting to watch. I don't know that I really have a prediction per se. The biggest thing I'm telling people is if you're taking debt out right now, make sure that you're buying something that you know is going to pay for the debt, for one. Get a fairly long term a loan that is going to be stable. And where we're unstable here, I think we might be unstable for the next few years. It's not going to stay unstable. Things will kind of get to a normal. And if you get 5-year debt or you get 10-year debt, that's going to give you enough time for things to kind of stabilize. And if you buy a property that is cash flowing and is in a good area where it's going to continue to cash flow and be a strong market, I think you're going to be safe. And I think if you're buying property now, that's the best way to do it.
Yeah. What about, for what I'm doing on underwriting, doing a 2 to 3 year refi, I'm using the 1%, so if we're at 6, I use, or 7, I'm using 6 as the refi.
Yeah.
Um, and hopefully there's others that are out there that aren't being too aggressive, because that's, over the next 12 to 24 months, there's just so many unknowns.
Yeah.
You think that's, for the community that you're in, you think that's a good number, as far as kind of underwriting?
I would say when you're looking at those types of deals, look at your worst case scenario.
Yeah.
Look at your worst case scenario, and can you live with that worst case scenario? Um, and if you can live with that worst case scenario, I'd say do it.
Yeah.
I mean, And when I say worst case scenario, I don't mean if, we go into World War III. I mean,
Yeah.
everybody's going to be affected there. You really can't plan on those types of things, but I'm talking worst case scenario of rates go up another point or two, you know, um, you know, 100 banks go out of business, money's getting harder to come by, those types of
Right.
things are, kind of what I look at as worst case scenario. World War III, another COVID, or disease X or whatever it is they're going to come out with. I don't know that we can really plan on those types of things. But um, if you get
And then
good, yeah, if you can underwrite to a worst case and you're okay with that, then I would say do it.
how about interest only? Where are we at that these days? Because before when we were looking at it, it was like, hey, we're lucky to get 12 months. Are we kind of back in the 24, 36 month range?
Oh, I mean, we can do a full 10-year on a 10-year term of interest only, depend if it's a nice deal. If it's a
Yeah.
nice deal that the lender likes, we can do a lot of interest only still.
Okay, cool. Yeah, we'll be in touch because more and more deals are starting to make a bit more sense.
Yeah,
So we'll be 2024 is going to be the year that we do maybe a couple deals together, hopefully.
yeah, I sure hope so, man.
Yeah, man.
Yeah,
Great to be on here.
yeah, for sure. I see Kevin, you got your hand raised, man.
Time for one more question.
Yes. So I wanted to see, like, how would you explain yield maintenance and how it works in terms of a prepayment penalty? Because I
Yeah,
know a lot of people right now, they're always turning towards the agency debt, thinking that that's going to be their best option, and they need to understand that one, right?
yeah. So yield maintenance, if you've got a 5-year loan, the lending institution is turning around and they're, you know, putting that putting that on their books. They're planning to get that, you know, 6% or 6.5% for 5 years, and they're planning on getting that set interest rate. Okay, and so this is why the prepayment penalties are there, is because they're selling those loans as a package on the market. When these loans go on the market, these investors that buy the loans are, guaranteed we're going to make this percentage on this loan for this many years. So when you get the yield maintenance, that yield maintenance is there to make sure that the investors that invested in that bundle of mortgages was guaranteed they're going to get paid that. So if you get a 5-year term loan at 6.5%, and let's say 2 years from now, that same loan, let's say we can get it for 4%, that 2.5% for that span of another 3 years or 2 years or whatever's left on that 5-year term, those investors are planning to get that money. So that yield maintenance is going to take care of them investors. So it's going to be expensive if you get out of that deal to get out of that deal if the rates have dropped. If the rates have gone up from there, and let's say they're at 8%, those investors are going to be happy to get out of that deal because then they can go collect more money and more interest. So that's kind of the way I explain it to people. So, um, so getting on to what can you do today if you're wanting to buy real estate? Everybody that's buying, most people on the call want to eventually be the guy that can sign on the debt. They want to be that KP. Um, First thing you need to do is make sure your credit's in order. To qualify for most of these loans, you need to have 660 or better credit score. I know a lot of the gurus, even Grant Cardone says, I don't need to have a credit score and all these things. Well, if you want to be the guy signing on the debt, you've got to show good credit. Start working now on your personal financial statement, your schedule of real estate owned. If you don't have much on there, start writing it down, because writing it down makes it real. And when you start writing it down, you'll start paying attention to it more and you'll grow it. Start getting your bio together. You're being educated right now. Start putting this kind of stuff on your bio. And we're 15 minutes over, so I'm gonna breeze through y'all. Work on raising capital or making more money. Those are more important things that you can start doing today. And a good way to make more money is join our referral program. So, the verse for today, this week's verse, Proverbs 29:18, where there's no vision, the people perish. So I think that goes into religious aspects of life. It goes into business, even goes into a family life. If you're a married couple and you have no vision of the future or where you guys want to be together, you're going to perish. You're not going to make it. So, next Zoom topic, we'll be talking on February 21st about agency financing. Plug into the Multifamily Freedom Chasers ecosystem. These are all the places. I think Shelly and JJ have been putting these in the chats.
Also, if you're not part of the Facebook group community, here's the link. Go ahead and request to be a part of that.
Yep. And this is for the WhatsApp chat.
Go ahead and scan that barcode and you can be a part of the WhatsApp chat. You can talk to everybody every day, all day long, and connect.
Yep. I'll give everybody a minute on this one. I'll go to our contact and we will be off of here in just a minute. I appreciate everybody sticking around. We're over 16 minutes and we still got 38 people on here. So we had some hungry real estate investors on here tonight.
Oh, those are the winners.
That's right.
And the people that'll be watching this after.
Yeah. And here's our contact. That is from my hi hello card. That's my cell phone number. Feel free to call me. And you guys make sure if you're praying people to pray for Shelly's mom. She lives with us here and she's got dementia, but she fell this week and broke her arm up by her shoulder and gonna need to get surgery and things. And to tell where it is, she keeps forgetting that she's broke her arm and keeps trying to pull her sling off. So that's just what we've been dealing with this week. So plug into the community, join the calls. These are the list of them. 8 o'clock Mondays, 8 o'clock Wednesdays. Make sure to jump on Ed and Kevin's next Wednesday and Iffy and BB's on next Monday. And thanks everybody for being on. And you guys have a great evening and a great rest of the week and see everybody Monday, hopefully.
Thank you all, and thanks for your prayers. I will leave you guys with some music. Have a great night. Thanks for joining. Bye, guys.
When I walk through the door, I'm talking cash flow. And if you know like I know, you getting cash flow. Prove what? Getting money, never losing hope. But broke, but now I'm living at it. They just count my zeros and some decimals.
And I wish you would try to test me, yo. You should listen to the lesson, no. Masterminds out of Mexico. I invested though when I let it grow.
Regiments I got a pocket full. Raise your income and your taxes low. Spend it right and then the best of more. And if you don't believe me, it's my doctor down.
What you mean? You mean Uncle G? Planting seeds for these money trees. Who got my money, please? Everywhere you wanna be like Visa.